sector-specific S&P returns, which show some very promising data specifically for the financials, healthcare, and materials sectors, where we will be focusing the bulk of our NYSE and NASDAQ investment. The reason why we trust this promising data is because of our qualitative analysis of some financial news. If we break this down specifically, for instance, for the financial sector, what we see is that the Fed's gradual rate hike process and stronger earnings growth have been great for the financial sector. This is coupled with the financial companies being freed from some regulatory burdens due to the Treasury Department's move recently to rewrite some Dodd-Frank legislation. And essentially, this benefits the financial sector because it allows it to operate more efficiently. A similar breakdown that we see for the healthcare sector indicates to us that an aging global population and chronic diseases are fueling the rising spending of care that we see in the United States. And though this is a very long-term sort of trend, we don't see this changing anytime soon, as it is topical now as ever, and actually increased innovation in the past few quarters in 2017 that we project ongoing in the next quarters is actually specifically in the biotech subsector, where we will see positive growth. And the Federal Reserve, as we've said, continues to raise rates. And so this sector in particular has outperformed traditionally on average since 1970 during federal hiking periods, which is why we're investing.
Okay, for the fundamental basics, we'll be aiming at companies that make a profit between 10 and 15% or above that will meet our financial objective that we have already agreed with our client. Furthermore, we will be requiring the company to have a healthy asset-test ratio, meaning that they should have more assets than liabilities, which will considerably decrease the market risk. Furthermore, we will be using the EPS and the price-earning ratios as our fundamental indicators because they can help us evaluate and judge the conditions or the value of the stock. They can help us analyze whether or not the value of the stock is appreciating or depreciating. Furthermore, we will be using the simple moving average or the SMA as a technical indicator. This is useful because it can help determine the market condition of the stock, meaning that it can help us evaluate and analyze whether we are investing in a bullish or a bearish market.
Additionally, we'll also be looking at the volume moving average to decide whether or not we believe we should invest in a stock. For example, our example stock, as you can see here, has a 50-day moving average above the 200-day moving average, therefore meaning it is a liquid stock. This means that we'll avoid any risk that could go, such as liquidity risk, meaning we'll be able to sell when we decide we can make a profit on it and crystallize our gains.
We'll also be investing to the Bahrain bourse, and the Bahrain economy looks relatively weak right now with sporadic growth rates and unemployment on the rise as well. Here you can see that the growth rate for the second quarter of this year was at 1.6%. 0.9% lower than the quarter before, and the market will have a negative outlook on these figures. The unemployment rate is relatively low compared to other countries, but it is on the rise at about 4%. And if it continues this trend, we expect consumer spending to fall and the businesses to have a negative, exposed to negative impact from this. The inflation rate, however, is relatively low right now at about 1.8%, but these figures are worth taking with a grain of salt because utilities doesn't seem, the calculation for utilities doesn't seem as it has been taken into account for these figures. But if the inflation really is low, then we'll be benefiting from it because the impact on our stocks would be minimal.
Taking into account the more bearish appearance of the Bahraini market, on the Bahraini bourse, our clients has adopted a significantly more conservative approach. He's less familiar with the market and as such is less comfortable with risk, choosing instead to focus on maximizing dividends, using these as an indicator of more defensive purchases. We project in the upcoming period a Sharpe ratio of 0.5 to 1, with these bounds supported by this historical cycle reference to this historical cycle report. And given our more defensive portfolio, we hope to stay within these boundaries and do not expect to exceed it.
So for our risk approach on the Bahrain bourse, we have a completely different approach with more low-risk stocks and high-risk stocks. But as you can see, we still have a mix to help us diversify. The minimum number of stocks in our portfolio is significantly less than ours in NYSE at 10, but this is so we can diversify in a smaller market as Bahrain bourse is significantly smaller than NYSE. For our stop gain and stop losses on Bahrain bourse, they're slightly lower than our NYSE stop gain and stop losses due to the less volatile and less liquid nature of Bahrain bourse.
Due to the much smaller size of the Bahraini market, we will be making use of a mixed strategy because it's now newly feasible to make greater use of bottom-up analysis. We will still overview the performance of the economy as a whole, however we will place a greater emphasis upon immediately identifying stocks that we believe will be viable in the upcoming period, using similar qualitative and quantitative methods as before. As you can see from our portfolio build-up, as seen here on the right, we have placed heavy emphasis upon defensive sectors, as seen in the top three, though we have attempted to diversify against the risk of an uptick by also placing cash into the more aggressive sectors, those three below.
This is a graph showing the profitability and market capitalization for all Bahrain bourse sectors. As we can see, it is in line with our capital allocation for everything other than industrials. That is up 70% this year, and that is mainly due to Alba exceeding market expectations and increasing by 100%. Now I'll be looking at example section in Bahrain bourse, in which I've chosen the investment banking sector. And the current economic outlook in the region is negative, and that has led credit rating agencies to lower Bahrain's credit rating from a double B minus to from a double B to a double B minus, and change the outlook from stable to negative, while also lowering Bahrain investment bank ratings. This will increase the cost of raising funds, thus a decrease in profitability and revenue.
Another sector we'll be looking at is the insurance sector, and an example stock for this is the Arab Insurance Group. ARIG has strong macro fundamentals, and it's made a 9.2 million profit in 2016, which is an overturn from its 4.4 million loss in 2015. Moving on to technical analysis, in the exponential moving averages, you can see that both the short-term and the long-term moving averages are on the rise, so it's a promising stock to invest in. Also, there are hardly any fluctuations on the moving averages, so the stock is less volatile and therefore more stable. And now on the MACD, you can see that currently the MACD is performing better than the longer-term moving average, so it's a good, promising time to invest.
And as a finale, through this program, we hope to develop our teamwork and communication skills, grow the financial literacy to understand the changing world around us, and build the essential presentation skills so that we may one day work our way into the corporate world that we hope to inhabit. Thank you.